Hello and welcome back to On the Brink. I'm Nick Carter. Today we're sitting down with Paolo Ardoino, the CEO of Tether. This is actually his second episode on the show. I'd forgotten we interviewed him before. That was in June 2020, almost 5 years ago. That episode was called Managing the Growth of Tether. At that time, the supply of Tether was about $9 billion. Today it's $143 billion. I think they've managed the growth okay. Obviously, such a pleasure to have Paolo on the show. He doesn't do that many public appearances. We cover a lot of terrain in this episode. Paolo has visited the US recently. He's coming on to share his views on the stablecoin bills making their way through Congress. And we discuss whether they want to eventually come onshore in the US. It was also reported today that Tether is pursuing a Big Four audit. We talk about that and why they were unable to do that in the past. We talk about their move to El Salvador, and Tether's desire to be more public-facing, showcasing some of the data and the usage of what they estimate is 400 million global users of the stablecoin. This is a great, wide-ranging conversation. I'm really glad Paolo came on. Let's dive right into it. Today we have very special guest Paolo Ardoino from Tether. Very, very excited. Obviously, timely conversation. Lots of news items around Tether breaking, including today, the announcement that you guys are pursuing a Big Four audit. Paolo, thanks so much for joining us.
Thank you for having me, Nick. It's a big pleasure.
So there's so much to talk about. I don't even know where to start. Yesterday, Trump spoke at the Digital Asset Summit, or I don't know, DAS in New York, and he said, quote, dollar-backed stablecoins will help expand the dominance of the dollar for many years to come. It'll be at the top, and that's where we want to keep it. It also came out yesterday. You tweeted Tether was the seventh largest sovereign buyer of UST bills in 2024 with $33 billion of purchases. How are you feeling generally about where Tether is today and the political environment in DC?
All right, there is a lot to unpack there. So I want to point out yesterday, I think my tweet was too short, but if you take the image that they posted yesterday and you look at the top three were Cayman, Luxembourg, and then you had UK, I think, fifth or sixth. But Cayman and Luxembourg, they host a lot of hedge funds. So when you see those numbers, you actually need to discount the fragmentation of the different hedge funds. So I believe that actually, if you were looking at real numbers, Tether would be top three buyer of US Treasuries in 2024. And on the rear end, you could see China and Japan. For different reasons, they have been selling US Treasuries. Japan, of course, they need to support their national currency that is not doing very, very well. And China, I think there is a clear interest in de-dollarization in the world, and selling T-bills potentially is being used as a weapon, like a financial weapon. They have still, I think, $770 billion to go in US Treasuries. So I think, when also I went in DC recently, I made of this point a very important part of my discussion. I believe that there is going to be, and I'm pretty proud because I created this term. Everyone knows about the DeepSeek moment for artificial intelligence. That was a clear, I think it's beautiful to use that analogy because we saw how Trump announced $500 billion in investment in artificial intelligence infrastructure one day, and then very next day, China came out with DeepSeek. And so clearly they didn't finish the V1 the next day. Very, very, I think would be very timely, but I think that they had in the pocket, they decided to announce it in a very specific moment. So what I think is going to happen is potentially a DeepSeek moment for the US dollar hegemony. And that I think is what we should be prepared for. And so when Tether built for the last 10 years, the biggest distribution network for the US dollar, physical distribution network and digital distribution network, we can enter in the details later about that. But so when we did that, and why we are doing it, when we are in Africa, when we're in Central South America, in these places, in most of the time, there is Tether, and then there is China, right? So the China is building highways, schools, hospitals, stadiums. There is no U.S. presence in Africa. There is no almost U.S. presence in Central South America. There is a lot of China, and so there is definitely, I think, the will from the BRICS countries to build infrastructure, to physical infrastructure, and then eventually launch an attack to the US dollar, a more heavy attack to the US dollar, to de-dollarize the world. And I think that is going to be, it will happen. First, the BRICS countries trying to create a digital currency backed by a bunch of national currencies. I think that quickly realized that it was not possible because they don't trust each other with their national currencies. But then what they realized that many people would like a digital currency backed by gold. So if you see the gold price today and what happened the last, and the clear information that everyone has of China and India and other national banks buying a lot of gold, I think that they are preparing for that, and that they're preparing for a gold-backed stablecoin, but run by the BRICS. And let me know if I'm saying the quiet part aloud, but I think is very, I think will happen by 2025 or 2026. So when I'm DC and I'm explaining what we are doing as Tether and why we have the fact that we have 400 million people using our product and effectively using US dollar, we are buying back the T-bills and all that, then I basically what I'm also saying is like, is that it's not easy for us, right? So we are a simple company. We're building this distribution network. And to us, the importance of the stablecoin bill is not simply about just making a regulation on a new technology. Is, in my opinion, a matter of national security, and that's how it should be treated. And there is a huge difference between, and the other part that I explain is that there is a huge difference about, rightfully so, lawmakers in the US are looking at stablecoins as something that should be used domestically, right? Their first interest is regulating stablecoins on the US soil because, that for customer protection and all that, that is completely fine. But I think it's not correct to think that the same product that works in the US, where you have a high competition through all the possible payments means, will work outside the US, in Africa, in Central South America, and so on. So there has to be a concept of a foreign stablecoin that operates mostly internationally, that can be accessed on the secondary markets everywhere, but does not issue to US people because it's focusing on all the emerging markets, and also a very a domestic stablecoin that focuses on the US market, because that is mostly institutional and based and focused, and also will focus on servicing or competing with the PayPal and Zelle and Cash App of the world, right? So that is the message that I'm trying to give and explain. I think in general works. It is working because people understand the importance now of stablecoins. Without the data points that we have, it's very hard to understand the importance of stablecoins, not only USDT, but USDT is the biggest one out there in the emerging markets to fight in the streets, right? So we never talk to any institution outside the US. We don't go to institutions in Brazil. We don't go into institutions in Central Asia, but we go in the streets, right? We build our adoption from the ground up. We knock door by door almost. That's how we built these crazy numbers.
Paolo, we haven't seen you in the U.S. much before. I mean, I think it's a clear sign that you're showing up to Washington to make your case. Are you happy with what you've seen from the bills that are making their way through Congress? I know we have the House and the Senate. They're a little bit different. They're changing. Are you generally happy with what you're seeing, or what do you want to see from this legislation, assuming it passes?
So I think the Senate bill is quite interesting. I think it captures the importance of stable coins that operate internationally that they are very much anyway under US scrutiny and will remain under US scrutiny because they would need, based on this bill, to abide to US law enforcement requests and regulations. So that I think is very important. We follow US laws and regulations when it comes to freezing. I think we are the only stable coin, including the US stable coins, that onboarded the FBI, US Secret Services. We work with the DOJ almost daily and the Treasury. So, and on the other side, allows for domestic stable coins that are thought to basically focus on the US markets. And it makes sense on the House bill that is still, I think, a draft discussion. I'm a little bit less familiar, but I think that the Senate bill is moving fast and is very well thought.
And now I believe the parent company is based in the BVI, and I know that you obviously have affiliations worldwide, Switzerland, El Salvador. I want to talk about that in a second. Is it your intent or desire to one day have some operations in the U.S. or even ultimately onshore the business into the U.S.?
That's a very good question. So I think that Tether International, the international stablecoin, should remain international, just because it makes, does not is not suited to be a competitor to PayPal, for example. But definitely, given, and we are going to watch the bill for the requirements of for US domestic stable coins. And we would be open to create a domestic stablecoin in the US because I believe that we have the best technology also for the US, but would be clearly a different business model. And so we would need to do a bit of research and understand how we can play in the US. That is a market that we never played into. And but that is very exciting. It sounds very exciting. But nevertheless, both the international stablecoin and the domestic stablecoin would go through a full audit. That's why we hired the new CFO that you mentioned. Simon has incredible experience. He went through multiple contentious full audits. The Tether one should not be contentious. Our balance sheet is very easy. Nevertheless, when you have Senator Warren and Operation Choke Point 2.0 and Big Four auditors are discouraged to take on crypto customers, that's not easy. I would call that contentious. So now I think we are in a good place. I think that the audit will remain and is top of our priority list. But now with the change of administration in the US, that change demonstrated and signaled to the Big Four auditing firms that is okay to work with the crypto firms. And so we are already seeing that change with much more openness towards us.
Yeah, I'm really glad you brought this up. So first of all, I'm not going to speak too soon, but congrats. I think a lot of people have been waiting for the Big Four to be willing to engage with you. And no one talks about the fact that there is this political campaign against the audit firms via the audit regulators in the US. Warren had a campaign against the PCAOB and the AICPA to get them to dissuade the audit firms from dealing with crypto firms. So this is like the audit version of Choke Point, So like Choke Point was bank regulators and banks. This is audit regulators and auditors. And I think people don't understand this is one of the reasons why it was hard to get an audit. The politicians in Washington didn't want the audit firms to deal with crypto firms. So you're saying that you've noticed a real shift in attitude since the new admin?
Yeah. And by the way, thank you for everything that you have been doing to highlight Operation Choke Point 2.0, because definitely that was a well thought attack to the entire industry, right? As you said, it was not just for the banks and the correspondent banks, but was an entire attack to also from multiple angles. So it was very hard to combat for companies that are like nascent companies, like for in a nascent industry like the crypto industry. So yeah, I think we are seeing a change, we are seeing a shift, because also most of the big four auditing firms, the leading team is in the US, right? So if you have an administration in the US that tells you, well, you should not deal with crypto, then it's very hard to change their minds. But something is moving, and I'm very pleased to see that.
Yeah, I'm very excited as well. Now, in terms of El Salvador, I mean, you made a very interesting announcement recently. I think you said you'd be moving the headquarters there. You will have some base of operations there. Can you say more about that and how that even came to be?
Yeah, El Salvador is a great place. Is first of all is a beautiful country run by a president and a government that demonstrated their ability to push change and make the country probably now one of the best countries in Central and South America to live in. Is definitely the safest country in Central and South America. While it was actually is the safest country in the Americas, while it was the murder capital of the world. So on top of that, they have been supporting Bitcoin really early on since 2021. We went through all the process there to and helped with Bitcoin support, but also they are the first country that started support and understand very well digital assets in general and broader. And also they created a digital asset law that is very thorough but well thought. And also they added recently, well, 1.5 years ago, they added a stablecoin law. By the way, they are the first country creating a very thorough and sensible stablecoin law. Is much better than MiCA. I've been very vocal against MiCA just because I believe that it's going to create systemic risks in European banks, because the MiCA for a big stablecoin like Tether would force 60% of reserves in uninsured cash deposits. I think it's a very bad idea. We saw what happened with a competitor that had some money in Silicon Valley Bank that was in uninsured cash deposits. Imagine having 60% of that. So it's not, and one of the things that I'm telling to and I'm trying to advocate for is to have stronger requirements when it comes to US treasuries, or anyway, in Europe, one requirement could have been pick the top 4 economies and buy government bonds from those top 4 economies. That would have made sense, but actually keeping 60% in uninsured cash deposits is a very bad idea. And on top of that, they want to. A couple of days ago, I saw the press release about their interest in doing the digital euro. Sorry if I'm sidetracking here, but clearly Europe is in that press release. They said that the digital euro for them is a way to prevent foreign stablecoins, foreign currency stablecoins, to eat up the market for euro. And my opinion, euro, the euro as a currency is dying, not because of because of USDT, is dying because in Europe doing business is almost impossible, and the GDP of Europe was cut in half compared to 20 years ago compared to the US economy. So long story short, El Salvador is the first country that has a sensible stablecoin legislation. All the other places, either you have Europe, that is, as I said, I ranted 5 minutes about it, or you have sandboxes in other places. But sandbox is not helpful for Tether given the size.
And now your engagement with El Salvador, is this just you're sort of physically domiciling some operations there? Like, how deep does that go? Will you be employing locals as part of Tether? Will you be changing your registration to the, what does that look like?
Yeah, definitely. We are hiring people there. We have our headquarters. We are renting now an office, but we are building a tower. I think it's to us makes sense. Like some people ask me, "Oh, why not the US?" Right? But again, we work in emerging markets, developing countries. So we need El Salvador for us is the door to Central and South America. So when we designed the working model of USDT, we designed based on the family stories of our employees. So we have people coming from 70 different countries now, well, 60 different countries, and every one of these people have different problems with they saw different problems in their countries with their families. So that is exactly how we design USDT. So for us, does not make any sense to be in Wall Street. We should be, in the trenches with our own people.
So you mentioned 400 million Tether users. I was looking on chain. I don't know where. I think I might have heard you say that on a different show as well. I looked on chain yesterday. I could find around 100 million addresses. I know an address is not a person, of course, and people have accounts at exchanges, and so it's not a one-to-one mapping. But is this a study that you've done? Like, how are you? Can you give us a sense of where you're getting this data from?
Yes, I think we had our chief economist was Philip Gradwell, was at Chainalysis first. Now came to us. He published couple of months ago, published the first analysis on how we calculate the number of users. So there is a very high activity on blockchains across all the different blockchains and bridges. And of course, we also count addresses that receive some USDT and then they keep it for 24 hours, they send it. So not every single address has to have USDT all the time, but they need to have USDT most of the time, right? Or at least a certain number of times per month. Plus, we have good contacts with many exchanges, centralized exchanges. Unfortunately, non-custodial holding of crypto is still not very popular. I believe that we should work hard to improve that. Just for multiple reasons, right? The matter of reduced trust on exchanges, a bit more responsibility, but the most of the reason is that most of the reason why people don't do that is because UX sucks. So we want to try to change that. We might be able to prove this change in the next year or so. We are going to launch a few products around this concept. But going back, there still what we are seeing, there is an enormous amount of people that use USDT only on exchanges. They don't want to hear what is a blockchain. They don't care what is a blockchain. If they want just to use peer-to-peer trading on Binance and some other exchanges, they want just to, if you are in Buenos Aires, if you are like you want just to, you have Binance Pay or Bitfinex Pay, you accept the payment, it goes to your account and you pay another person in Bitfinex or Binance through that in your ecosystem through the account. There is no blockchain transaction, all that. But when we inquiry the different centralized exchanges, we get incredible numbers out of in terms of user base of Tether. So it's a mix of, there is a lot of how we calculate a lot of on-chain activity, but also there is a huge amount of USDT permeates almost entirely all the different cryptocurrency exchanges. Plus, you have to sum all the different smaller exchanges that are like very local, like the Turkish one, the Argentinian ones, and all that, right? So we try to collect all the information from many, and we discount that. Actually, we discount the number a lot because we assume that there is a lot of some overlapping between different exchanges.
That's very interesting. Thank you. And Philip is an amazing guy and did great work at Chainalysis. So it's a great hire you've made. Do you plan on diving deeper into the data to understand geographic segmentation of users or usage modes by typology? I mean, I get asked this all the time. Aren't stablecoins just for trading? Like, what's the real world usage? Do you plan on diving into this kind of data?
This is exactly what Philip is going to do. He put together a massive data warehouse. It's in progress still, right? So, but he's building an incredible data warehouse. I was talking to a few people, very high profile people in the last couple of weeks. We showed just the first version of the dashboard that we have at Tether to understand how it's being used and all that. They never seen anything like that. It's just the beginning. It's a fairly expensive endeavor, but I think will pay off because there is not super precise information, of course, because blockchain is not perfect for that. But you can derive the more. Now we are connecting Chainalysis and probably other 15 different vendors, and we are building our own heuristics. and the level of details that we're going to get now already is almost insane. But the level of details that we're going to get in the next 6 to 9 months is going to be out of our minds.
Yeah, I mean, as a stablecoin nerd and a data nerd, I couldn't be more excited. So, whenever you're
We can
ready,
give you a
please
preview.
send it my way. I'd love that.
Yes,
I'd love
sure.
that. I'm getting very excited just listening to you. I want to talk about the balance sheet investments. So, Tether's made a lot of very interesting investments, not just, in crypto. Obviously, you hold a lot of Bitcoin, but AI, brain computer interfaces, Rumble, the video company, agricultural companies. I think it was reported Juventus, the soccer team. What is there a common thread in terms of the balance sheet investments Tether's making, or is there just a purely financial approach, or how do you think about that?
So when we say balance sheet, I want to clarify that is outside the reserves, all the investments in these companies. So the right, we have a different allocation. So we made around 20 something billion dollars in the last couple of years, 2 3 years. So there is a different approach between we have different categories. So there is the more long-term strategic investment, very low yield return, but very strong is Adeco Agro, agriculture investment. The company has a lot of land, so I believe that is very strategic. And almost like stable coins and land, gold, Bitcoin, to me are part of the same story. We have stable coins, we have gold, we have Bitcoin. You have to live somewhere. Like land is going to be quite important. I believe it's something that will be important forever. Um, then, so that is a particular category, I would say. Gold and Bitcoin, we're gold bugs and Bitcoin bugs. So clear. We started, we accrued, I think, around 50 tons of gold over the last, well, especially between 2020 2022. Well, it was very not good buy, good average price. So yes, so before every single BRICS country started to buy, so now they are pushing our bags of gold.
These investments in private companies and other commodities, is there a strategic rationale like with Tether, or is it just you want to diversify, you don't just hold cash?
There is. So I talk about almost everything that is mostly either like long term or it has been like pure investment and hedge. But everything else, for example, Rumble, I think Rumble is set to become one of the most important companies in the US economy when it comes to social media and streaming. So they're very bullish on Rumble, and plus Rumble is set to, Chris Pavlovski is big supporter of Bitcoin. They added Bitcoin to their balance sheet, and so just imagine if they had more than 70 million users, and they have basically almost the entire wealthy America as subscriber to Rumble. So imagine, so Rumble sold around 853 million dollars worth of gold between 2023 and 2024. Imagine what a Rumble wallet could be with Bitcoin inside. So and stablecoins inside. So to me, Rumble is perfectly set to become to bridge a clear Web2 company to a more modern approach to create an ecosystem that provides services that are social media services, but also add as part of the ecosystem also the concept of money. So I'm very bullish on that. Also part of the balance sheet, when it comes to, for example, Northern Data, artificial intelligence investment is one of our biggest investments. The opportunity there is just massive. It is very profitable. We entered the game, before that than almost anyone else. So it's already a very profitable business. And on top of that, Tether has a very strong AI team. We count around 60 people now. And we're building our own models, and we are building our own peer-to-peer inference platform. So I'm very excited about that specifically. Then most of the rest of the investments, we invested in more than 90 portfolio companies, is actually to build the biggest distribution network for US dollar. So actually, most of our effort is exactly that. So a few days ago, I posted, a couple of weeks ago, I posted about our approach to Africa, where we build kiosks with solar panels on top. And there are batteries inside with, rechargeable batteries, 140 watt per battery. We sell subscriptions to this service for 3 USDT per month. With 3 USDT per month, you get 4 battery swaps. We have more than 300 or almost 500 kiosks now. We are scaling up to 10,000 kiosks in Africa now that we proved the concept in the next year and a half. We have already, with 500 kiosks, we have already hundreds of thousands of customers. And we performed more than 10 million swaps, I believe, just in the last year. So the concept is great because, first of all, in Africa, you have 600 million people that don't have energy at home, but still they have flip phones or cheap smartphones. They have a small TV, maybe, and a few things like that. And of course, light bulbs and things like that, right? And a fridge. So these batteries can actually power some small machinery with 140 volts. So it's very cool because it is a change if we are successful. And our plan is in 5 years to have around 200,000 of these kiosks, so if we can scale very well. So first of all, is a change that you can see from space, because you can light the continent. If you ever saw Africa from space, it's very, very, very dark. And on top of that, all this economy will run on USDT. So we believe that we can bring on, only in Africa, 50, 60 million new USDT users, and create one of the biggest economies around the US dollar in Africa. So that is very unique as an approach, but that is one company. We have another 89 to go that are doing other things, but with a similar ethos and philosophy, like how we can either there are digital businesses or there are physical businesses like bodegas in Central South America. We have a network of hundreds of thousands of bodegas that are all dealing with USDT. That is one of the reasons why it's not easy to displace USDT in central in emerging markets, just because it's not I don't mean to be rude, but it's not a Silicon Valley game. This is like a game of being in the trenches and building, every day you wake up and you gain 1 meter in a street and you get people adoption. So while in the last 20 years with the concept of globalization, most of the investors were pushing companies that had physical distribution networks, were pushing these companies to sell the physical distribution network and rent it back because it was a center of cost. What we have been doing was the complete opposite. We started buying physical distribution networks to ensure our presence on every single territory.
Do you worry about, you're going from 0 users to 400 million in under a decade. Do you worry about being too successful about crypto-dollarization in some of these countries and in emerging markets and, being blamed for inflation in the local currency, things like that?
I think Milei is a very, he had some problems recently, but was on a very right track before that. And he understands very well that the success of the US dollar is not because of the success of the US dollar. I mean, if the Argentina peso was perfect, people would not use the US dollar in Argentina. So if you don't fix the country, sure, you can blame everyone. It's easy to blame everyone else for your faults, but clearly, if there is a problem in the local economy, what usually is happening is that the independent from the US dollar, what central banks do in the emerging markets is they print their own currency and use it to buy back dollars on the public markets to defend the FX rate. But they are trying to do the same. They're just basically trying to defend an FX that is impossible to defend. The beauty in finance is that financial markets are cannot be drugged. If you try to change the rules or you try to, inflate or move something in a forced way in a direction, it's physics. Financial markets are purely driven by physics, so you cannot game them. You cannot trick them. Eventually, they will go in the direction. There will be always a natural force to go in the right direction that where they were supposed to go in the first place. So point being is that until you fix the economy, you can blame everyone, but you have first to fix the economy.
So obviously, it's well reported you guys have a relationship with Cantor Fitzgerald. They manage a lot of your treasuries. Obviously, Howard Lutnick is now the Commerce Secretary. Has anything changed with your relationship with them since he came into office? Is he more hands off now, or do you still have a good relationship with the guy?
We don't have any more direct relationships with Howard because now he's in office and also has more important things to do. And on the other side, we have still great relationship with Cantor, and we still keep the vast majority of our US treasuries in Cantor Fitzgerald. We need, given the size of Tether, we need a primary dealer. We need someone that also offers like overnight reverse repos and a very liquid repo book and access to the basically direct access to the Fed, right? So that is super important to us, and so we're very grateful for the relationship. Also because they looked at Tether and they took their time to do their due diligence on Tether, even during Operation Shock Point 2.0. So
Yeah.
we were very respectful and grateful to the people that helped us when the entire former administration wanted to kill our industry.
Last question, I think, for now. On the business model of stablecoins, there is this new sector of interest bearing. And I know the legislation in the US, pending legislation, has some language around not permitting interest bearing stablecoins, so maybe it won't be relevant here. But we offshore, there's this notion of paying interest. Tether, of course, does not pay interest to its users. It's still grown very, very well in recent years. Do you feel any disruption in the core stablecoin business model from the emergence of interest-bearing stables?
I don't, for multiple reasons. First of all, okay, let me change my answer. For the US market, I think it will be tricky because in the US, people now are under all the biggest stable coins in the US market are paying interest. They can call it in a different way, but they are paying interest. Now, the main disruption could happen to them. Now, it's quite interesting because what will happen if they have to stop paying the interest? So where their market cap will go? That will be a very interesting question. Outside the US, if you go in Argentina, where their intraday volatility over the Argentina peso is more than 4%, probably, or at least on a weekly basis, definitely more than 4%. If you give them 4% per year, is not very exciting. They just want to know that they have a dollar. For them, they transition from having to buy cash bills in the streets to have the same thing but on a smartphone. So they're very happy without having the interest. Of course, if you talk to a rich Argentinian that can buy T-bills, that is a different thing. But most of our user base in the emerging markets is unbanked. So they cannot, so for them, having a safe dollar is the most important thing in the world. So giving 4% more, is not very interesting to them. So I don't think our business model will be impacted. I think that many, probably others, will see their business model impacted if if the regulators will really look at what they're doing. And I think we welcome competition. We think that although outside the US, competition will be very hard almost for anyone, because if you don't go in the streets as we do, there is no way to grow. And that's what we did, and it's very hard to do. So we welcome more people coming, more competitors coming to Africa. But yeah, will be very exciting.
Well, Paolo, I think we're going to leave it there. Any last word from you? Any myths you want to bust? Or, Tether is obviously a very unfairly maligned company. Any last word from you?
I met you the first time we were in Oslo, I think, for the Oslo Freedom Forum in person, saying. And look, many things changed. I remember very well the conversation at dinner. I think was very helpful. I mean, I started doing that slightly before our, that event, but I think the Oslo Freedom Forum was the second public event that it was doing, right? So I had to learn a lot myself. We went through hell and back as a company. So I think I'm seeing what makes also, I'm being very public, but was never in the US. I see the difference that makes me be in the US. So I will be in the US much, much more frequently.
Well, we're glad to have you. Paolo, this has been great. Best of luck with everything. Thank you.
Thank you very much, Nikita, for having me again.